Greetings, everyone. This is Richard Crevo with our chart reading session for the 15th of June. And as I mentioned in previous YouTubes, I plan on doing a chart drill down like this about once a week or so. So any of you who are interested can get a feel for how I like to analyze the charts each day to look for trading setups. And just as a recap, at the present time, open trades on currency pairs that I have been stalking, if you will, on this drill down. And incidentally, I do this drill down on a daily basis. I only, publicize it out here once a week or so, but I do it personally on a daily basis, looking for these setups. And open positions that I have right now are up roughly 1,200 pips over the last week or so. In some, there have been stop outs for losses. In some, there have been stop outs for profitability, and as we've trailed our stops up on those particular positions. But the bottom line is that the trades are net profitable overall, and that's our objective. That's our whole objective in trading. Now, if you have any questions about how and why my charts are set up the way they are, please reference the video entitled Chart Tutorial, which was posted on May 11th. And if you have questions on anything, feel free to email me at rcrevofx@gmail.com. All right, let's get through some of the disclaimers here. Let me move on to our risk disclaimer slide. And there it is. And essentially, trading foreign exchange involves significant levels of risk, may not be suitable for all investors. You should only be trading with risk capital. In other words, do not invest money that you are not in a position to lose. The high degree of leverage can work against you as well as for you. It's a sweet ride when it's working in your favor, not so sweet when it's working against you. And the content that I provide here is for informational, educational purposes only, and is not intended as specific trading recommendations. Okay, let's take a look at some of our charts here. Hang on one second. And as I've mentioned to you before, I use a strong weak currency analysis to kind of point me in the direction of what I feel are the higher probability trades based on that strong weak currency analysis. If you want to learn more about that, send me an email, rcrevofx, and I'll see that you get that out. I'll get that out to you. Now, I did a strong weak currency analysis just a few minutes prior to this session, prior to this YouTube, and I learned that the pound, based on the settings that I use, I look at a 200 period moving average on a 4-hour chart, and I learned that the pound is the strongest currency that's out there. The New Zealand dollar is the weakest. So one of the first pairs that I'm going to take a look at, the first pair as far as this currency analysis goes anyway, this drill down, is going to be the pound New Zealand. Now what I'm seeing here is clearly here's a weekly, a daily, a 4-hour, and a 1-hour. And we can see that, wow, since, April 18th, the week of April 18th, this pair has been on a tear to the upside. If we just take a look at it from its low point there to its high point, it's up almost 3,000 pips since that period of time. Obviously, there's been some fits and starts in between there, but essentially, obviously, it's been moving up, as we can see on our weekly chart. We can also see, using slow stochastics, that we've got good angle and separation. It's open to the upside, indicating that potentially on this weekly chart, there's more room for the pair to move to the upside. As we look at our daily chart, we see the same thing. The pair has been making higher highs and higher lows, continues to do so. We've got on slow stochastics angle and separation to the upside. And on our 4-hour chart, higher highs, higher lows, but it's at the top. It's near the previous high that it made at our upper Donchian channel here, and also on our 1-hour chart, because I like to use the 4-hour or the 1-hour chart for my entries. It's very near that upper channel. What I like to see is more of a pullback to a previous low down here, in this case, on that on the lower Donchian channel here. So for my money, for my taste, there's a trade potentially looming here, but I do want to see more of a pullback than we have here. In fact, we've got virtually no pullback at this point on the 1-hour chart, virtually no pullback on the 4-hour. So the pound New Zealand, even though the strong weak currency analysis pointed me in this direction, is not a trade that I would be interested in taking at this time. It's not a trade that I'd be interested in setting a price alarm on. Maybe 24, 48 hours or longer, if and when this pair pulls back down to the lower channel, then I'll be more interested in looking at it. Okay, the pound was the strongest currency. The yen was the next weakest currency. So I'm going to bring up that chart, pound yen. Take a look and see what that chart is showing me. There's the pound yen right there. We've got a similar situation. Pound's moving up. Obviously, we're going to expect that because the pound's the strongest currency that we have out there. Angle and separation to the upside, although it's trailing off a little bit. We've got higher highs and higher lows on the daily chart, uptrend. On the slow stochastics. The slow stochastics indicator, the K line and the D line are both above 80. That's an indication of a nice bullish move, which we can see readily on the charts. Price on the 4-hour chart has taken out the upper channel, and price on the 1-hour chart has taken out the upper channel as well. So this is not something, that I'd be interested at this time. It's the old kind of the train's left the station at this point. So this trade has already kicked off. I'm not interested in it right now. I might be interested after a retracement. Pound, we're going to stick with the pound for the strongest currency again. Let's go down to the next weakest currency, the third weakest that's out there, pound Aussie. Let's see what that particular chart is showing us. And I know the pound Aussie is here, and there it is. Okay, you'll notice how, the pound pairs are kind of moving symmetrically in a way. They're all showing us a similar look on the longer term charts. So we've got price action making higher highs, higher lows on the weekly, nice angle and separation to the upside on the slow stochastics indicator on the weekly. We've got right at 80, slow stochastics right at 80. So again, showing us an uptrend, but slow stochastics right here is bullish, but not as bullish as the signal we have here. The slow stochastics, the K line and the D line are kind of braided, which indicates almost like it's, kind of trying to make up its mind a little bit here. What is it going to do? The longer term indicator, slow stochastics, shows us it's got more momentum potential to the upside. Whether or not that materializes remains to be seen. We had a bit of a pullback here. Price has been ranging a little bit in this pound Aussie pair on the 4-hour chart, consolidating nicely. Price action moved down and virtually touched the lower channel, but came down to our 200 period moving average and then moved to the upside. For me, this is a good enough pullback. It didn't actually touch that lower channel line, but hey, close enough, and it put in a little bottom here at the 200 period moving average. So where I'd be setting a price alarm on this pair would be at that upper channel, and that'd be about 2.0170. I'd want to take a look when that price alarm goes off to see how the other pound pairs are moving. Currencies move in tandem. So if and when a price alarm would go off at that 2.0169, 2.0170 level, when that price alarm goes off, if it goes off, I want to see if the pound is strong across the board, because if it is, that's going to give me a greater likelihood, not a guarantee, but a greater likelihood of a successful trade. Let's take a look here at the weekly chart just to see potentially how much room this pair might have to run. And what I do here is, here's that roughly where we place that price alarm, 2.0177, roughly there. And then we follow our little dotted line across right about to this level, hit our little ruler icon here, and we can see that roughly this pair has 500-600 pips of room to move on the weekly chart. And again, that angle and separation on slow stochastics to the upside here is pretty compelling. Again, this is by no means any kind of a guarantee that this trade, if that triggers, this setup triggers, that it's going to move to that level. All it is it's giving us a higher probability type of situation. Because remember, we talk about setups, and a trading setup, as I mentioned in previous videos, it's just that, it's a setup, nothing more. And it may or may not cause, a setup may or may not trigger. And if it does trigger, it may or may not produce a winning trade. So these setups are probabilities. And that's what we're looking for in in trading, probabilities that have a greater likelihood of success than not. We're putting those probabilities, those trading edges, quote unquote, in our favor. The setup and its execution by no means assures any kind of a winning trade, but this is the way we would go about, this is the way I would go about in this situation, identifying entries. So we checked out the strong pound, and we went down toward the Aussie, which was the last one we looked at, and that's the one that I would set a price alarm on. Let's go the other direction. Let's take a look at the weakest currency, which is the New Zealand dollar when I did this, and pair it with a strong currency. We already looked at the pound New Zealand. Let's look at the euro New Zealand. The New Zealand dollar being the weakest, the euro being the second strongest currency that's out there. So let's go down to that euro New Zealand and see what we're looking at there. Okay, weekly again, we've got a situation where price has just pretty much been on a tear to the upside. We've had a weekly close above the 200 period moving average. That's a bullish indication that price potentially can move higher. We've also got some angle and separation, although we've got a little tapering off here on slow stochastics on the weekly chart. We've got, as we would expect, higher highs and higher lows on the daily chart, building out to the upside, continuing to do so. Slow stochastics is above 80, which is bullish. 4-hour chart, we've got a nice consolidation that's been going on in here. Let me expand that for you a little bit. We see the pair has just been trading in a range, oscillating, consolidating for a move. Which way it's going to be? We don't know yet. We don't have that crystal ball. But the higher probability direction of the breakout from this particular oscillation slash consolidation is to the upside, because that's what we're seeing on the long-term charts. Guaranteed breakout to the upside? No. Greater likelihood of a breakout to the upside? Yes. So let's go down to the 1-hour chart. Here we see that oscillation in 1-hour increments, 1-hour candles. Here we see it in 4-hour candles. So if I were looking at trading this pair, and it does have my interest, we would be setting a price alarm at 1.6161, 1.6160, 1.6155, somewhere in there. Something that if price takes out that high, it's going to bring us to our computer, bring us to our cell phone, so we can take a look and see, is the euro strengthening across the board? If it is, that's a good sign for going long. Is the New Zealand dollar, on the other hand, weakening across the board? And if it is, that's a good sign for this pair. If the euro is weakening across the board and the New Zealand dollar is weakening across the board, so much together. Remember, there's only 3 things that can happen to make this currency pair move up. Either the euro gets stronger, the New Zealand dollar gets weaker, or both things happen. And if both things happen, that's a more compelling scenario yet. So I'd be looking at a price alarm on this around 1.6161, something along those lines. Let's take a look at the New Zealand Swissy. New Zealand dollar, Swiss franc. That's the next in our array here, and see what that is telling us. Okay, price action. Traded right up to the 200 period moving average there. This was that candle. I won't get into the details on it, but the week of January 10th. Anyway, you can look that up if you want to. Swiss National Bank made a move. And pair has been moving down. Open to the downside. Lower highs, lower lows. On the 4-hour chart, we've got a pullback almost to the upper downtrend channel here. On this particular pair, if I would be interested in trading it, I'd be setting a price alarm at roughly 0.6557 to come and revisit that particular currency pair when that price alarm goes off. If that price alarm goes off, again, these are setups. They may or may not happen. And that's why I like to come back to the charts at the time that a price alarm goes off to see if then I am still interested in taking that particular trade based on what's going on across all the various currency pairs. That's what we have time for today. So I hope you enjoyed this drill down. My ideas, like I said, educational purposes. I do personal one-on-one mentoring. If you're interested in that type of thing, email me at rcrivofx.